Good afternoon, everyone, and welcome back. This is Daily Trading Analysis with a quick market update for today, Wednesday, November 29th. Today, we got a lot of information in terms of economic data and also on the technical analysis side of things. Be with me because we are going to review a lot of things that will explain you, will make you understand why we had such an incredible sell-off of the highs. But bear with me, as always, we are going to start with economic data. NBA 30-year mortgage from 741 to 737. It's still not super low rates. That means that applications are continuing lower from the 3% to 0.3. People are struggling. They are trying to refinance. Mortgages are a pain right now. But the main thing today was GDP growth quarter over quarter, second estimate. This is an estimate. We were expecting 5 from 2.1 and we got 5.2. Big increase. Remember what Fed said. Growth means higher interest rates. Corporate profits skyrocketing 4.1%. That's due to earnings. And GDP price index also estimated 3.5% as expected, but look at this, 1.7 to 3.5. This is, more growth, more prices. This is the fight for inflation. Be really careful because things are starting to look really bad in growth and prices. On the other hand, we have Core PC estimate also quarter over quarter. We got from 3.7 2.3, slightly lower than the 2.4. So core prices are decreasing, and PC general prices 2.8 ticking higher from the 2.5. We were expecting higher, so less than expected, but still it's not looking good. And obviously, I think Fed Barkin was in here. No, was not in here. But Fed Barkin said today at 10 o'clock, he said, I believe inflation will be stubborn than we would like. Inflation, more prices, more growth, more PCE prices. All these things are happening. And he's not willing to take another rate hike off the table. At 10 o'clock, he said that, obviously, because these numbers are not good. We had some good, decent numbers, but if inflation does not progress lower, they are not taking off the table another rate hike. If we check the FOMC FedWatch tool, as you can see, markets are still not pricing any more hikes this year. And at the same time, they are betting for another one interest rate cut. So we have, this is 1, 2, 3, 4, and another 5 at December to finish 1.25% lower than the previous one. So this is market expectations, and this is not aligned with what Fed is saying. This is not aligned with what data is telling you. So be really careful because these kind of things explain you why, obviously, the market sold off that much. We are going now to the charts. And let me explain you, I'm trying every single video in my channel, it's trying lately to explain you why the market is moving the way it's doing. It's looking for liquidity. Markets move towards liquidity to rebalance imbalances or find an equilibrium after a big move. So this is pre-market right here. Let me just zoom a little bit. Yesterday, we got this decent push into the close. And if you watch closely, we left a 15-minute fair value gap that I was watching. So I always trade pre-market, I always watch pre-market, and I mark these two zones of liquidity just to see if during overnight what we do. And look at this, the first move took the first one. We started consolidating and we, on London Open, we pushed the second one and also the third one. And that one was from Wednesday last week. This is from Wednesday last week, this liquidity. The next one, the next big one, we have one here, but I usually take the 1 hour one that is more important and everyone is watching. This liquidity at 16,173 was the main thing that I was watching as a super extension towards liquidity. Everyone was getting stops up here and market just look at what it did. First liquidity taken, second liquidity taken, no pullbacks, leaving gaps behind. The third one taken, and we approach the fourth one at 16,264. I was prepared for that, and look at what they did. This is the 1 minute chart into the open, skyrocketing, taking this liquidity at 16,173 pre-market high right in front of your eyes. So what you do? Either you just jump in or wait for a pullback. I was waiting for a pullback, and the first fair value gap that I saw is this one. If we do this, this is not a proper retracement. I wouldn't take that. And instead, we were just grinding higher. One top, second top, flash. So you have to be prepared for these kind of things. They took all liquidity during overnight and they just sold everything until pre-market low. Big, huge short. Obviously, this is, you have to be super experienced to see these kind of things and to take advantage of that and take a short up here. But it's scary, I understand, but they just continue grabbing the other way around liquidity. They had stops down here on the 50 minute sell side liquidity taken. Another sell side liquidity down here taken. These ones two were taken, were buy, and then we approach this zone of more liquidity here and more liquidity here. And finally, remember that markets are painful. Pre-market low, they swiped that, and then I was looking for longs. So be careful trying to catch bottoms. Every single move today was extreme, leaving gaps behind or rebalancing again the market. Look at where the point of control is. Up here. Isn't this crazy? We are grinding higher. This is the trade that I took. With patience, I waited. I watched here, waiting for that pre-market swipe. This is the setup that I trade. No more sell side liquidity. They took this low, pre-market low, and we saw that push. That push left behind a fair value gap that I took 1 and 2 times, only 2 contracts. I am taking a reversal here. I don't want to be extremely aggressive. You could also add here, but just 2 contracts. My target, obvious. This inverse fair value gap right here. This was my trade. 2 contracts, one from here, another one, this one was on the dip. The second one was after confirmation. So basically my average was here. This was the trade. It was, I think, 30 points with 2 contracts. That's 1,200. more or less. And it continued, but I don't care. I don't care. I'm done for the day. And you don't have to be aggressive when you have these kind of huge moves today. Today is obviously bearish. Today we were super extended into the open and they just smacked everyone. If you want to try to catch a bottom, you have to be really patient and you have to really understand what you are looking for. And they were looking for everyone out. That's why they swiped pre-market low. This is unbelievable move, but sometimes this is what market does better. Other things that I saw, dollar, it's just chopping around. Small caps, pretty damn strong, to be honest. That's why the S&Ps are obviously quite also, was as strong as the Nasdaq. Banks are quite in the green. Google and Meta got destroyed today, and Nasdaq is trying to just put a little bit of green for the bulls. But let's just analyze the daily. Or better than that, the 4 hour. Okay, let's now do the 1 hour. So the 1 hour, there's a lot of lines. I'm going to just clean this. We swept this. So this is already bearish. We have a series of equal lows here and here. We have also a big liquidity area and also the huge 1 hour fair value gap down here from the big day. Now that they swiped this, I'm more bearish than bullish. I don't think we are going to continue higher now that they took this liquidity. They are going to move around. They are going to destroy everyone. And then down here, I will again look for, try to catch longs. That is below 15,900. That's 300 points below our current price. But this is what they do best. They do that kind of thing. So if we now try to review everything, let's clean up everything, what they did, unbelievable, but this is what they do better. Sell side liquidity. So today, I don't think we are going to see again these levels. As I was mentioning, I think the move is towards the downside. The next big move, we are holding though. Let me just highlight this. We are holding this. This is the 1 hour chart. We are holding this fair value gap on the 1 hour. This is the only thing that we are holding today. Big time frame imbalances. After that, this is just chop from yesterday. They will just attack the next one. So if you have some trades, just look below here. Don't try to short again because they might squeeze up here. There are certain imbalances up here. This fair value gap on the 30-minute might be quite useful, interesting to see. I will watch these 30 minutes as an inverse to see if shorts react down here. But waiting for tomorrow, I will just let today happen, let today finish. And as you can see, I have a lot of liquidity down here, along with this fair value gap on the 1 hour. So I think all these levels are going to get target this week. After this move, I'm not looking forward upside. I'm looking forward to more downside after today's shakeout. I mean, you have to understand that they took a lot of liquidity up here in order to reverse on the day. I mean, the most probable outcome would be to attack again the liquidity below because they have the target. They want more shorts. They just stopped everyone. So this is my forecast for the rest of the week. I don't think I'm no longer bullish unless I see a really big move. Anything can happen, but I will be reacting to that. But right now, my bias completely changed once they took this liquidity up here and destroyed everyone today. So sometimes it's just that simple. You have to Go bigger time frames, see bigger imbalances, and this is the 4-hour chart. We are more or less holding this 1 hour, but there's a lot of imbalances down here, and the big kahuna one down here, sooner or later this is going to happen. Let me tell you, they are going to just rebalance that zone. So we might do things like that, and then here we might have some opportunities. Once they take this, we might have some opportunities to really see more upside. That would be insane, I know, but they have to rebalance all these things because they already did today. So if today's move, it's out of your mind, be prepared because these kind of things happen every single day. On the 5-minute chart, we have this huge 5-minute imbalance. You get another sign of bears. This is another sign. So these two inverse fair value gaps holding mean tomorrow will be more red. So watch that. Watch also the last battle. This one, there's a lot of imbalances up here, so they will need to rebalance at some point. But we need today's price action to finish and to see how we end up today. And that's all from my side. As always, thank you for your time. If you found today's videos useful, please give it a like, subscribe to the channel, because I upload videos every single day like this one for market forecast, market updates, and market recaps. I appreciate your time as always. Remember that discipline and risk management are key for success. Study, study, and study. Do technical analysis. Follow the fundamentals. Try to learn as much as possible because these markets are wild. Stay safe, everyone, and see you tomorrow.